Hey everybody, it is Wednesday the 5th, and this market did pretty much exactly what the buyers wanted it to do. It came down perfectly. I mean, you just cannot make this stuff up. Came perfectly to the week to date, month to date volume weighted average price. As I said in the midday video, I was preferring a pullback to here. But just like I outlined in yesterday's video, the scenario we were looking for was it to pull back down into that area and then buy above this level. I'm not here to call trades out as they set up, but as I refer to them the evening before, this is what you should be looking for, and hopefully you had participated in this. And it's now looking like if this market is going to sustain this turnaround and head on to bigger levels, that's a big if, then your absolute worst case stop on any position that you have initiated long in here goes below this low right at that point. Ideally, we can, we see this volume weighted average come up underneath that tomorrow to give it a little bit layer of extra protection from the VWAP from the low. But I mean, you just cannot make this stuff up, and I hope that you're taking advantage of this type of setup while the overall market, the stocks, aren't set up as well. We've got that declining 20-day moving average coming up. Now, last time we saw that it acted as resistance, but it acted as resistance in a couple other places this year, such as right here. But at this point, it just jammed right through it. So just like any volume weighted average price, moving average, Fibonacci, they're levels of interest to be aware of. They have the potential to slow a move down. They are not a reason to act. We act based upon price, and what I'd be looking for tomorrow is maybe we see some further upside. And again, this is the key level, I think, for the next week or more that we want to measure risk against. I can't make that any clearer. In the NASDAQ, we saw a little bit deeper pullback, and this market didn't really behave as strong or as predictably as the SPY. However, once it got back above the daily volume weighted average price, this market could have been bought as well with a stop below here. Clearly the lower risk purchase was in the SPY because it just behaved better. And you can look at this and say, well, Brian, aren't you picking? You could be like the people on Twitter and say, aren't you picking and choosing because it didn't work in the NASDAQ? And I'm going to say, no, I'm not picking and choosing because the concept of where to buy was consistent and the risk was consistent in both of these markets. We don't buy pullbacks blindly. We don't buy at these volume weighted average price levels. We're looking for that conjunction to potentially become support, but I never suggest that you buy at a level of interest. We wait for the volume weighted average price to be breached as the buyers gain control, and then we set a stop. This is the same exact setup we talk about every single day in individual stocks and in the market. Please review this video and yesterday's video 100 times if you have to understand the concepts, because they are the constants in the market. The Russell 2000, I didn't even look at this, but I'll bet you it just hit that perfectly, and it did. So, that's why we put them both on there, because they're levels of interest and they're not action points. The action point is when it gets back above the volume weighted average price for the day. You can see where I drew that incorrectly, that it didn't provide value. But, here, was this a good buy? Hindsight says it was, but I would say not as good as the other markets because it was a little bit extended at that point. But the same concept applies. It's about risk reward. What's the best setup? So in here, perhaps we're headed for a test of the volume weighted average price off of the August high. I'm not looking for turning points. I'm looking at levels of interest that might become a place of supply that slows the market down and then distributes and then turns back lower. Then we'll get bearish. But again, I just try, I get frustrated when people don't understand. I'm talking about concepts. I'm not here to call out a trade and say, buy the SPY right here, right now. I can lay it out in advance what the scenario is that we're looking for, and you've got to take the action. It's your money, it's your account. This is not a day trading service, and even in the swing trade section, area, I'm not here to tell you what to do. I'm here to outline the trades and let you understand the logic for them and decide if it makes sense to you. Where did the buyers show up in the biotechs today? Right at the week to date, month to date volume weighted average price. Is anybody surprised? If you are, you're a fool. Because seriously, this is how markets work. I'm not calling you a fool necessarily. I'm saying you have to learn a lot. A fool doesn't mean you're dumb. It means you have learning to do. So I don't know if I came across right on that, but no offense meant to anyone. But please pay attention to these levels. I can't be more adamant about it. It's just really, this is market structure. This is how markets move. Let's see if it continues to follow through something like this. The financials I'm not going to talk about because I don't like to talk about them. The energy names made it right up to this trend line that we spoke about midday. Let's delete that one. So, this is clearly a level of interest that might become supply. I wouldn't short against it. Maybe it continues up to this band of resistance previously. Don't short a market above a rising 5-day moving average. If you are, I think you're an idiot. I really do. Yes, you can get lucky, and yes, it might pull back, but why put the odds against you? I've got the passion in my voice here today. Hopefully, you can hear it and you're learning from it and it makes sense.